So based on fresh data conducted by Hamptons, house prices are expected to see a 2.5% annual increase by Q4 2026. However, not all areas are created equal. So London is actually expected to see no growth whatsoever from now up until this time next year. Now, they've conducted a further study on actually assessing what they believe the house price increases will be via the different regions from now up until 2028. And again, it doesn't look too good for London. So house prices are expected to increase by only 0.5% from now up until 2028. And when you actually compare it to other areas in the UK, it's actually quite shocking. So in the East Midlands, Hampton expect to see a 10.4% increases on houses, and in the West Midlands, a 12% increase. When you look at big counties up north, such as Yorkshire, they're expected to see a 12.5% increase on houses. And in the northeast, house prices are actually predicted to go up by 16.4%. So we're seeing a massive divide here. You know, when you look around London, southeast, southwest, the house prices increase are also very minimal as well. And then you've got Scotland and Wales, where it's quite considerable, with house prices also expected to increase at substantial rates as well. So what is actually going on? Why is it that London is actually stagnating, whereas the house prices up north are steadily increasing? So one thing that's actually affected house prices in London is the increases in taxes. So stamp duty tax has increased over the last year. And this is going to impact house prices that are already high more than any other house prices. And London house prices are extremely high. So stamp duty is a rising percentage. So you can see here that the higher the property purchase price, the more proportionally you have to pay in stamp duty tax. So it's not like there's a set threshold, no matter what the purchase price is. Actually, the higher the purchase price is, the more proportionally you have to pay. So this actually stops people from paying the amounts that they were paying previously. In addition to this, now you've got the mansion tax that's actually come into place as well, where residents of properties worth more than £2 million are going to have to pay a further surcharge of £2,500 in council tax, rising up until £7,500 for properties worth £5 million or more. This is now making it less attractive for people to actually want to move into London and actually purchase these properties. Now, up north, a lot of areas are still quite affordable. So for example, in the northeast, the average house price is £161,770. It's obviously a lot more affordable when you consider the fact that the average house price in London is worth more than £500,000. Now, I've been saying for a long time that up north is a far better investment vehicle than it is down south. And previously, it was because that actually up north was seen as actually the place to get good cash flow and good rental yield, and down south was all about capital growth. Well, the tides are actually changing. Up north is better for rental yield, and it's actually better for capital growth as well. Now, we've looked at capital growth and why up north is likely to far outgrow down south. But even when you look at the rental yields, it tells the same story. So if you look at the rental yields here, again, we're seeing that up north, the rental yields are far, far better, more lucrative than down south. I mean, if you look at London here, you can see that the shade is very light. So the lighter the shade is, the lower the rental yield. And the darker the shade is, the higher the rental yield. And as investors, unless you're actually doing a refurb or you're refinancing your money and you know how to get your money out of the deal, and you actually have to be at the property to see what's actually happening with the building, it makes more and more sense to actually invest up north. You get more for your money from a cash flow perspective, and actually you're likely to see better capital growth as well on your properties. And if you're looking at actually the type of properties and strategies that bring in the highest rental yield, you can also see that here. So you can see HMO is number one, followed by freehold blocks, which is the strategy that I use. So it's also worth actually considering not just the region you're investing in, but the type of strategy you want to invest in as well, because you want your investment to stretch as far as it can. So hopefully this video has helped you understand what's actually happening around the region and what's actually expected from a capital growth perspective. And if you are looking to invest for the first time, it's something to think about when it comes to the area you want to invest in, because it's looking more and more that up north is a far better investment vehicle than properties down south, not just from a rental yield perspective like it's always been, but actually from a capital appreciation perspective as well. So if you enjoyed this video, do give it a like, and if you have value from this video or any other video on this channel, then do subscribe as well. And until next time, happy investing.